You spot an important news announcement, but you're not sure how to trade the release. In this case, Facebook announced the specifics of its new stablecoin Libra. Do you get long? Do you sell the news? Well, in this video, we're going to discuss in detail a strategy to capture this trading opportunity. If you want to learn a new trading strategy to help grow your trading account, then this video can help. Hi, I'm Mike Bellafiore, co-founder of S&B Capital, and we're a proprietary trading firm located in Midtown Manhattan. And I'm also the author of the trading classic, One Good Trade, and the Playbook. Go ahead and click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community. Well, in this video, we're going to teach the gap and fail trading strategy. You're also going to learn the correct entries for a gap and fail strategy, examples of reasons to exit winning positions in this strategy, how to combine variables to make professional risk-reward trades, an important question to ask when you spot an opportunity like this, the S&B challenge to improve your trading business. And as always, we hope the biggest reward for you in the trading community is how to learn how to think through a trade like a pro. For those who want to see winning trades to add to your trading business, check out this video. If you want to learn 3 real-world setups that our traders use, including the simple setup that we teach all of our new traders, and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing right now at the top right-hand corner of your screen. That's going to open up the free registration page in a new window. Don't worry, you're not going to lose this video. You can also visit tradingworkshop.com to register for this free, intensive, awesome workshop. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
Okay, so this is a trade from last week. This is a gap and fail against the market trade in Facebook. The day it came out with the specifics on its news about its cryptocurrency Libra. So the big picture of the market that day, this was the first day that the Pentagon released information they believe Iran was behind a tanker attack in the Persian Gulf. The president will call this attack very minor later on, but the markets saw a lot of volatile movements because of it. They had been trading in a tight range over the past couple of days, and most of this can be attributed to the fact that a major Fed decision was the following day, maybe the most watched one in the past couple of months. And the market was gapping up coming into the session because the European Central Bank was speaking of lowering interest rates, and a lot of United States investors thought that we could do the same. So here's the SPY trading in that tight range and then gapping up pretty heavily the day of this trade. And this is the day before the Fed decision. These are the Qs doing the same thing. And then these are the intraday fundamentals of Facebook. So typically I wouldn't trade Facebook unless it's very in play, but they announced recently the release of their new cryptocurrency. This news came out a couple of days earlier, and Facebook saw its stock price rise over the past couple of days because of that. But today was day 1 of the specifics coming out about the coin. One being that it's a quote-unquote stable coin that will mirror the movements and behavior of the US dollar. So normal people who aren't involved in speculation or are worried about the rapid rise and fall of prices like Bitcoin or Ripple can get involved in it.
All right, so given that, that's important. We've got to sort this out. All right, so this is day 1 of the news coming out.
Of the
officially.
Yeah.
Of the specifics of the news coming out. And then we want to go and check what about how Facebook has traded since the news came out that they were going to potentially come out with a coin. What's super important for us to do?
Look at the longer term.
Yeah, we got to look at the longer term chart and ask ourselves what?
Where has it come from?
Yeah, how much has it gone up since they started to talk about, hey, they were going to release a coin? And so do we have a good answer on that?
Yes. This is the 5-minute chart, and you can see that we came all the way from the low 70s to almost 200, mid 190s in just a matter of 3 days.
Okay. So that's going to be one of the first things that I check when I'm thinking about trading this. And certainly one of the things that I check if I'm thinking about a gap and fail, or if I'm thinking about a gap and follow through. That's going to really matter. And when you go back and review these trades, that's going to be a key element as to how this goes in trades. Like for instance, if it hadn't traded up a lot since the news came out, and then now the news is very specific, and the specific news comes out, well, we'd be a lot more bullish and expect more so that there'd be a gap and a hold and a gap higher. That would be a strategy that would probably work more. If it had gone up a lot, like in this case, then we would expect much higher odds that there'd be a gap and fail.
So in addition to being a stable coin, it also announced details that it had more institutional backing from firms like Visa and PayPal that would be readily accepting these coins, as well as Uber and Lyft, I believe. And statistics, very low short float, as this is a market stock, a very high average volume, and a high ATR. You can see this is where we've been on the daily chart, and we've seen some pretty volatile movements recently. This is the 5-minute chart that we saw earlier. And this is the chart the day of the trade. You can see we gapped up and then failed pretty much all day, finished at the low of day. So here I'll talk about trade management, what I actually did. So I initially came into the day thinking that this could be a long again, even though we had come from much lower prices and had gapped up so much. I thought perhaps the addition of the institutional backing would get everybody on board with this. So when the market opened up, I was looking to see if this would present a good long setup. As you can see, it did not. That push failed from the pre-market resistance immediately, and I started thinking short. This is a strategy I've been backtesting, and it works most of the time.
All right, so for the youngest interns in the room, Dr. Steenbarger talks a lot about this, which is if there's going to be heavy selling throughout the day, and there's going to be big money selling throughout the day, what's one of the patterns you see right away on the open?
Hard flush.
Hard flush, big move to the downside on big volume. That's indicating big money traders are getting out. They're getting out quickly. They're not that concerned about price. They're not patiently trying to get out of it. They are getting out of the position. This gap is giving them prices that they really would like to lock in. But that first move on heavy volume down right on the open is, and you're picking up on this, that's information that we could have that gap and fail and a trend back to much lower levels. Okay? So look for that first move. And if we had thought that this was a day it might have a gap and go, one of the patterns you'd look for on the flip side, the mirror image of that would be buyers coming in, chasing prices, lots of volume, showing their hand. Okay, this is the sellers showing their hand.
So even though we had that push and fail, I did not initiate the short, and I'll talk about that in my trade review. But I did enter the short when we had this push over VWAP, then a rejection, and now I entered when we couldn't even touch VWAP the second time.
Remember, when the move is steep to the downside and it's so young, we'll see that leaking through VWAP a bunch of times, it's not as big of a factor. It's not as big of a deal as trading above VWAP as it might be at other times. All right, so steepness and youngness, a leak above VWAP is not to be, we don't give up on the short right there. We could just have a little leak, and then if it starts to hold below there again, could very well be the pattern.
Correct. So I initiate my short position at 92.77 and watch it come down here. I didn't add on this pop. I was just giving it to VWAP to stop out on it. And then we flush right back down to about the opening range, and we could not get beneath there. For me, that was a reason to cover my short. So I covered the whole thing. Then I'm keeping my eye on it throughout the day, not trading it, but I have alerts set, and we come right back down to that opening range. Except this time, it's very weak, and we go beneath it almost immediately. And that's when I put the short back on.
All right, that short's going to work if the sideways consolidation is for a longer period of time and that support level there is more pronounced. You had a trade decision to short that back up into VWAP. You may have paused doing that because you could see that as a potential double bottom where you covered, and that you may have said pass until I see it definitely going down. But you had a trade decision there, and the pop, can you circle that? The pop back up to VWAP, you've got a trade decision right there to put that on. If you love the potential pattern of a gap and fail, you're going to take that trade. If you're not so sure, you're going to pass. You're going to look at that bar down right on the open and judge it. The higher the volume, the more likely you're going to take that reshort into VWAP. The higher it's gone up over the last many days before this official announcement is going to get you to take that short into VWAP more likely, because it's more likely to gap and fail. So those are the things you're going to be thinking about. And notice, we're not just thinking about price and volume. We're not just thinking about the fundamentals. We're not just thinking about the news story. We're not just thinking about the tape. We're not just thinking about the market. Okay? We're thinking about all of those things. And we're trying to put together a good trade. All right, good. But that's a good place to get back in. Give it a run.
Absolutely. In hindsight, the market was really strong at this moment, and Facebook was continuing to be weak. So that could have given you even more conviction to put the short back on earlier.
All right, good. Look, and this is a trade that you can replicate. So there are going to be lots of opportunities where we're starting to hear that there's going to be news that's coming out on a company. We're not sure exactly what it is, but the market likes it and starts to buy, props it up, and then the news comes out. Or on the flip side, we're starting to hear negative chatter. The market doesn't like it, sells it off, and then the news comes back out. So these are patterns that you'll see quite a bit. And you want to put into that bucket of now the news is out and how am I going to react to that? All right, so it's an opportunistic trade, one you want to get right, one you want to start to put together in your playbook and give it a run. All right, things you would have done differently about this trade?
For sure. I didn't initiate a short when my bias flipped to short in the first minute or 2 minutes of trading, after we had that push up to resistance and immediately failed with a large amount of volume. As I said before, that's something I've back tested. I know that it typically works. And on a stock that would be so in play like today with the market gapping up, that would be a time where you could hit it short.
What specifically have you back tested?
I've back tested where a stock gaps up over a certain percentage, and then in what conditions does it retrace that move. And usually it's the first minute or 2 minutes, we see a strong push up and then an immediate rejection.
Okay, good.
Once it falls beneath its opening price, it's usually downhill from there.
Okay.
And the Qs and SPY were very strong by comparison. I wrote here that the trade I did make was okay, and re-entering it under new circumstances, in this case the break of the opening range, was a good decision. Something that I typically miss because I'm not looking at the stocks anymore after like 11 o'clock.
Yep.
So I'm glad that I stayed with this one.
So let's go back to the trade management. So you guys are taught that opening move trade. So the opening move trade is, we're going to play that first move. So if the stock starts to tick down and the tape shows weakness, we're going to hit it and play for an opening drive to the downside. If you've back tested that this is more likely to trade off early, and you also have a discretionary pattern that you can use to make profit, that first move opening drive play, when you see it start to tick down and you've got your back tested results, you're a very powerful trader right now. Okay? You're a bad expletive deleted. All right? That's, or I'll do it from the positive side. Like you're a strong player in the marketplace, okay? So really great job having those back tested results to use, but I want you to use them with the patterns that you can spot as a discretionary trader. And so that opening drive to the downside, think about taking, all right? Think about leaning on that move back up to VWAP when you passed on it a little bit more, when your back tested results show you're more likely to be right, okay? And then I actually even think, can you show where we have the tough down move, all right, we leak above VWAP, we get below VWAP, we get back above VWAP, but then we get below the first low from before, like right there. You see that first low?
Right here?
Yeah, I think you want to take that trade. If I have back tested results that this is going to sell off quickly on the open, I'm armed with that, I'm leaning on that short. Okay? So that's very powerful. One more challenge for you. One more S&B challenge for you. If I could rewrite the playbook, so all these playbook trades you guys do, this comes from the second book that I wrote, the playbook, and the template that I laid out there. If I could amend, rewrite, improve on the playbook, what I would do, and maybe actually put it in there and just don't remember. I wrote it a long time ago, and when I read on Twitter quotes from either One Good Trade or the playbook, oftentimes I'm like, who wrote that? And it's like, it'll say my name. I'm like, oh, all right. That sounds pretty good. But I actually sometimes don't remember writing it. But if I could go back and amend it, if there was a playbook version 2, I would add a trade strategy slide to your playbook trades. And a trade strategy slide in your S&B challenge is to add this trade strategy slide. It's just a general blueprint for how you're going to trade this strategy. How are you, Houston, going to trade a gap and fail strategy? What's going to get you short? What are your rules to exit? What are you looking for overall? A bunch of if-then statements strung together to give you a general Houston strategy for a gap and fail strategy. And the reason I say that, I'm going to short if, I'm going to cover if, I'm going to get out if, I'm going to cover a quarter if, I'm going to cover a half if, I'm going to get flat if. The reason I say that is it'll give you less things to think about in real time. If you have like a general idea as to what you're going to do, now you've got maybe 1 or 2 things to be thinking about and not 20. And if you think about 1 or 2 things in real time, that's easier to do than think about 20. Hey, go ahead and click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community. And please take the time to add your feedback in the comments section for what videos you'd like for us to produce next. and what you found helpful from this video. From all of us at S&B, train and trade well.